Hello guys, glad to have you on board again. Today we're going to take care of these intraday usual sessions. I'm still having troubles with Bookmap, so I'm hardly going to be able to handle the Bitcoin's review at the moment. But you already know about my current context. I don't know really what the hell this is. Is it going to look like a triangle? This is pretty damn hard to say. So I don't have any global context to trade at the moment. I can definitely say that this is a trending market, but we already know that. We've crossed below a sine wave target without even questioning it. So there is definitely a trending move ongoing, at least in here. Still waiting to find its bottom. We have the early exit signals in here, but still failing to find a cluster of information. So we can have some exit-like structures, but not price confirmed. We do have some extensions a little bit further today. So all I could say right here, right now, is that we're trading the 10K area, which is actually not really a technical area, but just a psychological one. We've dipped below the moving averages, so 1 hour is back in the range, all right? Like, we were bullish, now bearish, bullish, bearish. So I don't know what the hell this is, because I didn't really understand this movement. I don't really understand this one either. So I tend to say when that is the current context, I generally have to zoom out. And in here, I cannot stress any more information from this market. All I can say right here, right now, is that we're pretty fucking oversold and still on top of the previous lows. So this is not the kind of structure you want to be selling. This is neither the kind of structures you want to be buying. So this is all I'm doing right now. I'm putting this alert in here if we ever get to pull back and retest this original area. And I put an alert in here if we keep on falling down to the major support areas. And until then, I just goddamn don't know. I know it's hard to say, but it really looks like a noisy structure in which the latest, or let's call it the latest two events just got out of my usual risk management structures. So what I can tell out of this, institutionals are not taking care of these prices. Who are trading this? Who's trading this, I don't know, but these guys are not risk managers. So we're pretty much trading psychological things. Like in here, we're pretty much loaded on buyers, so the market goes on the opposite direction. In here, it's probably because there were too much sellers that we got up. So it is hard to say. All I can tell is that this is the kind of structure you can hardly profit from. I highlighted this area previously. I traded it, got stopped out, so I'm not going to catch up on a falling market because I don't nearly think the market is about to trend. All I think in here is the market is just about to range. So selling without a risk management is just probably the best case scenario for you to end up buying or selling the bottom or buying the tops. So just don't trade when you don't have anything to trade. Sometimes it's just worth the wait. I don't think in here there's any FOMO trade or a forthcoming trend to emerge from this. We could go down to this area, yes, trying to test the moving averages, but the current underlying structure in the price action that led us toward this price area we're trading right now, it just feels like a range. So I'm still needing a little bit further validation to consider this as a potential triangle, and if such thing happens, then you clearly will see this triangle setting itself in this area, all right? We need to build a higher low in here. Looking at how bearish the momentum is, or oversold, I wouldn't be surprised if we can hold on to the 10K area, which is a big if. I goddamn don't know, and I have absolutely no early signal showing some positive activity in here. All I have is a market falling, searching for Fibonacci retracement. We're inside the tradable area. We're between 61 and 76, which are the typical areas for triangles, though we still need a price confirmation, a price triangle. So if we can manage to have a bullish triangle in here after this oversold cluster, overloaded cluster, then yes, we could possibly have another triangle range boundary, and in that perspective we will have lower highs and higher lows. And then we can eventually say, all right, triangle is down the road, and we'll still have a couple waves to go. And in that perspective, all I'm going to look forward for is for the volatility to drop in this area, and eventually I'll make another buy and hold. But that's the only condition. And obviously, if I do trigger a buy and hold in here, and if the market ends up breaking down, I'll just release it and buy lower. Simple as that. All right, so multiple options, but right now, too many options, not enough information to process any reliable trading action in there. So sometimes just wait. I know you guys ask me to know everything about like every time and every price action movement. I don't understand the latest movements, though I don't necessarily want to be trading anything unless I've got something to trade. No risk limitation, no trade for me. Even though on the shorter time frames, as long as we haven't tried to build somehow of a support in this area, I can hardly do something. Regarding the stock market itself, I think these are some ugly moves in here as well. So today has been hell of an early price action, though I can tell you for sure that today's cash session in the US stock market is going to be interesting. When I say interesting, I say volatile and probably emotional. So nothing like you can exploit either. So today is a tough session. Who would have known where we would be? Like the previous video I made for the French guys like a couple hours earlier, we were in a totally different situation. We were breaking down the supports without any bullish signals. So we were getting into those areas like now we can see we have a divergence, but when we were trading it back then, oh man, who would have imagined that we would do such a bullish engulfing 1 hour candle coming out of nowhere, knowing that China was retaliating to the US, but somehow Walmart saved us. So we're in a news flow market, definitely the kind of price action I hate because we can feel the tension in this area. It's definitely there. We can hardly figure out anything to trade. So in here, same conclusion to me. We're trading fucking ranges. And those ranges have been highlighted by the indicators, reason why I don't think there is any reason to rush on pressing any button. If you want to risk manage on this area, like partial profit taking, just do it out of the potential selling entries you would have done in here. I personally didn't. So all I have right now in my pockets are the short entries I have on the market top, and I definitely don't want to get them out. So I'm not profit taking out of them. I'm just putting them at break even and waiting for this goddamn range to be figured out. Either to the upside, and I'll probably be stopped out at break even, or to the downside, and then I'll be triggering some reinforcements. Right now, current session, what the hell am I going to be doing? I can't tell you. I don't think this market is technical. I think we're ranging and we're news ranging. We're ranging out of a news flow, and that's the worst possible context to trade. Markets are going up and down, depending on whatever can hit them at any single time. So you can try to risk manage in here using your technical advantage, but we're in psychological context and feeded by a news flow, which is unpredictable. So how the hell do you think you can handle trading those kinds of prices? I can tell you for sure you can't. So you can press any buttons. It's going to be random. So if you rather like to flip a coin, then do it, because that's exactly what it goes down to if you're about to trade with technicals in such contexts. I've been warning you about that. Don't trade right now. We are trading so higher stakes right now that short-term volatility makes the market moves for 2 to 3%. So we've got a range setting itself from 3% wider. So if you think you can manage any intraday risk management in such indecision, then I can tell you we don't. So following on from my strategy way of trading, there's nothing you can do right now. But just, we've got a range. All I can tell is that in this range, these are the two tradable areas, waiting to get into this risk-reward area. This area is no more than a risk-reward ratio, all right? So I don't know whatever the fuck is going to happen in here. All I can tell is that this is the only price I'm ready to trade. Simply because this is where I got decent risk-reward ratio. Otherwise, I'll just do nothing. Let it go with my selling entries on the higher time frame. So if anything goes unexpected to their bullish plans and everything falls apart, then I'll be on board. And I don't need to be more aggressive right now. That's what you need to understand. Obviously, that's a pretty different picture. If for some reasons you failed on selling the market tops, then I was clear about that. If you want to catch up any retracements, then you can go ahead. All you need to do is to decently manage your risk taking, as your stop loss must be set out of those areas. If we go there again, then definitely you need to be out, because who knows what's going to come next. We shouldn't go down those areas again, or go up those areas again. So remember how we do intraday trade. Normally, we follow a simple plan. We go cash market, we have a look at the market structure. What do you see? Lots of gaps, but there are no pending gaps on the upper prices, so there's no reason to retrace. The only gap we have right now is out of 28.93 up to 29.26, but this is not an open gap. It's just that we've gapped down the previous day's low. So in a daily cashing market structure, this is not a gap. This is not the kind of gap you need to fill. This is what we call common gaps. Range gaps. And for now, these are gaps that are suggesting a bearish movement might be initiating. Of course, if we don't, then we'll have to retrace and eventually close this gap. But as long as it's opened and not filled, we should follow yesterday's session, which has been opening at the highs after a bearish gap, opening out the previous day's lows, and closed at the lows. So today's session doesn't open with a positive. Today's session doesn't start with a positive bias. Yesterday was pretty freakingly bearish, but today, as you can see, we're probably going to open with a potentially tiny bullish gap, which could probably lead us to retest previous day's lows. So in a technical perspective, 28.80 is an interesting area on the short-term perspective to eventually try to figure out 3-minute signals or whatever. But like I said, we're trading out of psychology with a undefinable news flow. So 3-minute time frame trading in these areas, just do you really understand how this doesn't fit together? So just let it go. I think today is not the kind of session you want to trade. The only thing you can trade is a decent risk-reward ratio if we get to retrace those areas. So let's get straight to the point. The daily chart doesn't give us any informations. All right, we've got nothing to trade. All we do is in here a gap that says the market might be wanting to be bearish, but we're still supporting and trading out of a price who says the market was bearish down there. So bearish, bullish, who knows who's going to take over? It is hard to say. The current inflow is pretty much bearish, but we already made such bearishness. So we could range in here for a longer period of time. These are the contexts I would say. Neutral to bearish range is my current context in those markets. So if we go intraday, 1 hour, just like we said, all we've got in here is noise and ranging structures. So bearish range or neutral range is what we're trading. So earlier today, we've managed to buy this dip out of a very ugly and dangerously traded resistance divergence, and I personally never thought about buying this. I had absolutely no information suggest this could be done, no additional stuff. In here, we could have been on the verge for a breakdown, like this range. Remember that the two opposite square signal normally says you've got a range and the range is pretty much matured, right? Or at least normally you should be visibly talking, see the range. So to me, the only range I was able to forecast at that point was something like that, like a flat range, all right? So, and we were trading down this range after testing it. So I would say, all right, in here, really could have been a breakdown area. Like we get in here and everything falls apart. And I wouldn't nearly have been surprised about that. So what we do right now, I just can't put it in my boxes. So I can't risk manage, so can't do anything in here. It's pretty much like the crypto market. Those times are rare. I can rarely tell you that I don't know what the hell I'm about to do because I have no risk limitation. That's exactly the kind of stuff we have right now, both in cryptocurrencies and in the stock markets. I don't understand the price movements. I don't think I can profit from them. So I'd rather like stand by. I still have my neutral bearish bias and a bearish bias in the midterm time frames, though those trades are still opened and I don't intend to close them. But nothing suggests a possible intraday trading at low risk. Nothing suggests any midterm reinforcements, though doing nothing is my only remaining option in here, and I hope you guys understand that. So it's not that I don't want to, it's just that right now I have nothing to do what I would like to. So in the meantime, I'm going to leave you guys with that, hoping that you get the message. The message doesn't mean you don't trade. You can trade short term if you really want to. Just be aware that if I don't, I strongly suggest that you lower your leverage to the minimum if you want to go short term trading, just making sure that if I don't know, China is doing something or Trump's tweeting something or whatever, you just don't get caught into movements that you can't control, because those things are definitely out of your control. Like, consider the chaos level at the top right now. The market doesn't know where to go, volatility is pretty fucking high, and the market doesn't have anything to trade but unpredictable news flow that is showing up here and there, coming from there or there. So, too complicated, just let it go. All right, and if you absolutely want to trade, remember about the 2880 area, which is the previous day's low. It is not a price to trade, it's a price area. All right, so set close to 2880 for probably a 10-point area. Eventually look out for 3-minute signals, but that's all I can tell you. And remember that if you do trade with unfolded boxes, then, oh man, no way, you shouldn't be doing this. All right, so have a look at the 3-minute. Do you see anything you could have been buying today? It was just profit-taking structures in here without confirmation, with unfolded boxes. So worst case scenario for a buying entry. So I don't know who bought those lows, but definitely not risk managers. So we'll see. All right, so either we go back to those areas and whoever's been buying the dip is probably going to get the fuck out, which is probably going to create some downward volatility. Option number 2, they can hold up to this, and we're going to search for the resistance area that I highlighted. So figure this out as a 15-minute tradable area. Don't trade unless you've got a 15-minute signal in this top range area. Minimum 76% fib retracement is 29.15. Option number 2, we get down the previous low, which potentially will trigger a bearish trending acceleration. Though in that kind of context, if we can break yesterday's low with candle closes and holding on to the previous day's gap, then normally the trend will reactivate itself. The underlying supports are pretty fucking far. So if it goes down, it's an open bar, right? It's an open door for crazy fucking bearishness for the next 24 hours, or let's say until tomorrow's candle close. Because if we go down, the next support is to break this one. There is hardly going to be a support in this area. Still, we're already 6% lower. So just imagine minus 6% in 2 days, the market will start to somehow riot. So the underlying supports remain pretty fucking low, as I think, in my personal opinion, at the moment, there is no support unless we get minus 10%. So I would say the 2600 to the 2500 area is the support area. At least minimum 61% retracement, which is in here. So if we get more bearishness in Wall Street, this is where we're going to head to. And this is pretty fucking low. So just be rational, all right? Just be rational. I think that what we do trade right now is out of your potential control. So if anything falls apart, we've been preparing for this. Like, don't think it's too much. Don't think it's overstated. Don't think it's overrated. Don't think it's too much bearish, though, that you need to buy. Just let it go, all right? Remember, like I told you, the market now has a memory, which is the worst case scenario in an economic cycle, when the market is trading because of its previous state. Though we had previous buyers who keep on buying because they've been used to buy the dips, and they still think it's going to work forever. Though I can understand that, but it's not going to work. As sooner or later, they're going to fail. They already failed in here, though we do already have pre-signals that this beautiful mechanic is starting to potentially deteriorate. At least we do not play the buy the dip anymore, or we do it really cautiously. The second thing is we've got pretty much concerning risk-taking over those areas. Like, we've got all in from the central bankers, and the market better hope everything goes along the plan, because if anything goes unaccording to the plan, then this is where the shit starts to hit the fan. And as we priced in, or we priced out a lot of risks, they better not show up. And let's be honest, we haven't been solving any of those risks. North Korea is still there. The Brexit still a pending mess. The US and China trade war is just worse than it's ever been. So I'm sorry to say that, but we've been flushing out some risks that are still there. So we better hope they don't get worse. If they do, then we'll have to price them in after flushing them out. Though it means we're tracing to areas we haven't seen yet, or haven't seen for quite a long time. So those earlier trading areas, yeah, we can go down these areas without a problem. Regarding the news flow we have currently, with China potentially retaliating at the US, this is new. This is pretty fucking new, and that doesn't go along an easy solution to this problem. But more than that, like a deepening problem, like a war, something that you start and you don't know how to end it. So don't think this thing has to fall because of this. This is not the case, all right? This thing can fall because of it, but so far you have absolutely no clues about that. All I'm saying is that if it goes down, you probably have sold, or you should have sold with me at the market top. Just let it go with those positions. If you fail on them, I mean, if you profit take them because you think it's going to be another buy the dip, if it ends up being a buy the dip, then you would say, great, oh, I picked the right decision, Phil was a bullshitter, I'd rather have liked to listen to myself rather than listening to his advices. Yes, all right, you'll be right this time. Well, you can be right the next time or the third time in a row. Yes, fine. The day you'll be wrong, then just imagine how you will react. Like you profit take in here, the market starts to fall, and in here, you say, oh man, I should have sold. What the hell am I doing? You're going to sell in here or whatever, but you're going to do shit. That's exactly what, and I know that for sure. If you're a beginner and if you start to limit your gains, as there is absolutely no clue that you should reverse, and you're gut trading. That's the reality. If you start to get into gut trading in here, it means you profit take because you feel the market is going to V-shape reversal like it did in the past. You're trading what you think. You're not trading what you see. Do you see any signs of reversal in here? I see profit takings out of a trend channel. Yes, but if we go down this area, it means those who profit took, where's the next area they're going to be trading? This is where they're going to be trading next. So like I said, we already tested the moving averages. I hardly think this area is going to be a support. We can range in here for a bit, but I definitely stand that this area is very likely going to break down. And when it will, the next area is pretty fucking 10% lower. And I don't nearly think this area will work out. I think this area will be straightforward fucked up down to the major lows. That's what I think. Yes, that's what I'll trade as well, as long as I haven't been proven wrong, or as long as any new information doesn't prove that the risk is increasing against my trade. Right now, all I see is just profit takings. Well, I took 20% profit off the table. I think that's all it's worth. I don't want to close those positions because I think you need to have them to avoid doing shitty decisions if the market starts to fall like a falling knife. And it can do that. Remember all the shit we've piled up, we can just concentrate all that shit in a big falling move, just like this one. It was irrational, no one was expecting it, and stuff like that. We piled up so much irrational trading, and we released all this energy in like an electrical burst. That's exactly what we could do right here. A couple weeks of total irrational market pricing. And if we do this, then if you're not already bearish in this, you're going to search buying entries. I know you will. And if you do this, you're going to make it even worse. Don't buy any fucking thing in this market. Please don't. I know you will probably do it. Just don't. All right? If you want to buy, don't try to catch the dip. If you want to buy, you'll buy a breakout of a resistance, and I'll tell you where. Just buy my stop losses if you want to buy something, but just don't try to catch the dip. It is not about time to do it. It's just like we might be at the fucking reversal. So if this is right now that you're getting to reverse your position and looking at buying because you think we're going too irrational in the opposite direction, no way. Just no way. All right? That doesn't work like that. If you took the losses with me when we were trying to sell these areas, just remember those losses. And remember that now we might be on the verge to do the opposite. Like some people want to buy in here, they're going to be wrong-footed. They're going to try buying in here, they're going to be wrong-footed, just like we were. So don't forget what happened. The market is trading with a memory, and so should you. Though remember what we've done previously to get up here, it was stupid. And you know markets are going faster to the downside than they do to the upside. So if we release all that energy in a couple freakingly bearish weeks, don't try to buy the dip. Don't try to catch the knife. Just trade and partial profit take on all the areas we've highlighted. In here, depending the signals you'll partial profit take, like a 20-25% profit taking. If we go below this area, keep on going and look for the lowest areas. If this one doesn't work out, you know where the next one is. The next one is in here, out of the previous low areas. This is where you make your second profit taking. Right? That's simple as that. And in between, as the market goes down, any 3-minute, 15-minute pullback, you try to sell them. If the market is getting crazy selling, it's going to be fast. All right? Though I think we're preparing for this. I don't know if we're already ready for it. I really don't know. All right? But all I can tell you is that if today we end up going down this area again, there's a possible breakout acceleration. all right? So trade safe, be ready to understand that what is at play right now is huge volatility. The VIX remains at 21. It's big, which means if you're trading with leverage with this, you just don't get it with trading. We could pretty easily get to 30 today without a single problem. And if we get the volatility at 30, you can be damn sure that we're going to go down this low. So volatile, indecisive, emotive, all the things I've been stating previously, I really hope you understand that. I'm saying it all over again. Today's session is not going to be easy, and it isn't for myself included. Okay? So trade safe or don't trade.